Smith. Senator Butler of California is recognized.
Thank you, Mr. Chairman. Chairman, good to see you.
Good to see you.
And I am going to make you do the whole last 5 minutes, since I'm the last one for today. You'll recall the first time that we spoke, I tried to engage you around 3 specific areas. One was how the monetary policy impacts the quality of life for young Americans in the future and the work that you are doing there, the space of climate risk, and what I see as potentially a future challenge down the road, and that is the state of commercial real estate. You and I have had that conversation before, and no surprises today. I'm going to stick to those 3 topics. Somewhat related to questions that you've been asked before relative to the housing market, housing affordability, and interest rates. I want to narrow the scope just a little bit to ask about those issues and challenges impact, again, the quality of life for America's next generation. Given the severe shortage of affordable and available homes to buy, coupled with high interest rates, young Americans are continually unable to afford homes and are pushed into a rental market, driving rental costs up. So there is sort of trickle-down impact here. A recent Washington Post analysis showed that Gen Z is spending 31% more on housing than their millennial counterparts were 10 years ago after adjusting for inflation. How do you view, that was a long lead-in to just ask the question, how do you envision or view the interest rates of today and the monetary balancing, policy balancing that the Fed is doing on contributing to the future generation predicament if we are to extrapolate the conditions of today?
So our job, of course, is the whole economy and inflation for the whole economy. And the absolute best thing we can do for younger people is to restore price stability so that as we benefited from, I graduated from college in 1975, near the end of the big inflation period. So during most of my adult life, inflation has just been not a factor. And that means, stable interest rates, relatively low interest rates. We want to get back to that, and that is what the Fed's job is that we're not supposed to look at the housing market as separate from the overall economy. In the meantime, though, there's no question that higher interest rates are making it harder to buy homes in the short term, but in the longer term, this is the best thing particularly for younger people who are not yet in the housing market.
Let me sort of in line with that community, constituency, population, and definitely aligned with the concerns of my state that's actually facing some severe climate impacts, just as we speak with wildfires and our colleagues and fellow Americans in Texas and the impact of the hurricane. I wanted to pull in your sort of thoughts about the Fed pilot on the climate scenario exercise. In May, the Fed conducted a pilot climate scenario exercise and asked the 6 largest U.S. banks to examine their balance sheets and how it would be effective if a large hurricane hit the Northeast. They reported facing data gaps on property characteristics, their counterparties and insurance coverage. How does the Federal Reserve intend to invest in expanding the modeling resources for banks that are implementing climate-related financial disclosures? So
we haven't made any decisions on what to do with that information or whether to repeat that exercise. To your point, it was really a learning exercise. How are banks thinking about this, and how are they modeling it, and how does it work really? It's a very, very challenging thing to model. And so that was really the nature of this exercise. In terms of disclosures, we don't really have that's not really our job. That's really the SEC. So, but we don't have a big job on climate, but what it really is to make sure that the institutions we regulate are aware of and understand the risks that they run, including risks from climate.
And that they're prepared, and learning how to, as would be the point of a pilot, learning how to mitigate those risks over time. So what criteria will you use to evaluate whether or not you would run the exercise again and or share more broadly the results of that exercise?
I think we did publish, well, most of the results of that exercise. So I don't know what to say about that. We're looking at it and we're asking ourselves, what did we learn? What do we need to learn next time? So, I'm not exactly sure what factors we'll be looking at, but we'll be doing a careful assessment of what more we need to do.
Thanks. Thank you, Mr. Chairman.
Senator Haggerty's